Good evening, everyone, and welcome to today's session on mastering FP&A reports. I welcome you all. It's first of all, thank you so much for your trust, and it is important that you appreciate yourself and pat yourself on the back for taking action. You see there is a statistic that says that less than 3% of the people take active action to develop their careers, and you have taken out your valuable 60 to 90 minutes to spend time with us to come here, learn something new about FP&A reports, right? So that is something interesting, and pat ourselves on the back for taking action for that. So a little bit about us to begin with. My name is Dhaval Parvatikar. I'm a qualified chartered accountant. I've completed my 1-year executive general management program from IIM Ahmedabad. Over the last 15 years, I've worked in various industries from software, oil and gas, advertising and public relations, and also a shared services of a commodity trading company. I've served as a CFO and a finance leader in India and Middle East. Currently, I'm based in Dubai. I'm also the co-founder now at FP&A Professionals Institute. It's been a year now that we have co-founded FP&A Professionals Institute along with my partner Asif Masani. I've been an active mentor. I've mentored thousands of chartered accountants and finance professionals through various initiatives, one-to-one calls, articles, ebooks. I've also been an online instructor. Over the last 5 years, I've trained more than probably 6,000 professionals now on various topics, including FP&A, business partnering, data storytelling, CFO coaching, leadership, and much more. And I'm happy to partner with Asif here today. So Asif, go with your introduction.
Thank you.
You're
Thank
in
you.
lead, Asif. Yeah.
Thank you. Thank you so much, Saval. So quickly about me, chartered accountant from India, 14 years of experience, I think 15 now, working across different industries. Mainly, my experience has been in banking, edtech. Right, those are the two industries where I've worked extensively. I met Dhaval, I feel about 3 years back, and that's when we started our first program, our first FP&A training program with 25 students. And right now it's become a big institute, and we've trained together more than 3,500 students during the last 3 years. And I've also written 2 books that you can see in the background, all about FP&A, from accounting to FP&A. A lot of people read those books and are able to appear for interviews. So I keep getting messages from a lot of people who are readers of those books as well. So happy to partner with you, Dhaval, and we'll get started with the session after the brief introduction about FPI.
Amazing. Between Asif and me, we have close to 3 decades of FP&A experience across various sectors. One thing common about Asif and me is that we are extremely enthusiastic about helping finance professionals upskill in their careers, and that reflects in all the work that we do for our students. It's been a year that we have co-founded FP&A Professionals Institute. It all started with a small course in 2018, which I hosted on Udemy. It's called FP&A Foundations. It is still a popular course on Udemy. More than 2,000, I mean, 2,300, 400 people have taken the course. 22 is when Asif had launched his popular book on Amazon. And we came together in 2022. We launched our detailed version or extended version or signature class called FP&A Masterclass, which has done successfully more than 16 cohorts now, more than 450 students. This is a 4 weeks program that we run, which covers all the fundamentals of FP&A. It's a live coaching program. 23 is when we launched the self-paced version of FP&A Masterclass called 8 Weeks FP&A Launchpad. If you are somebody who likes self-paced coaching programs or self-paced courses, then this is the program for you. About 500 plus students have taken that course as well. We then extended our courses to master financial modeling, which Asif runs and which has also done successfully 9 cohorts, over 200 students. And again, very, very focused training on financial modeling that is required for FP&A. No investment banking, no valuations, very specific stuff, which is pertaining to financial planning and analysis is what is covered in the Master Financial Modeling course. At the beginning of 2024, Asif and I joined hands to start FPI full time. And then we launched our 6-month program, which is doing very well. It's called Certified Global FP&A Professional Program. The 3rd cohort is currently running. And also the 4th cohort will start from the first week of April. If any of you are interested, do get in touch with us for that. Then again, Asif launched a 2nd book, which is called From Accounting to FP&A, and at the beginning of this year. And also we launched our AI for Finance and FP&A program. We noticed that a lot of inquiries are coming to understand about AI and its applicability in FP&A. So that is when we launched our AI for Finance and FP&A program, which is also done successfully, I believe 3 cohorts for now. That has been the journey for FPI so far. Under the FPI brand, we have trained more than 3,500 students across these various courses, webinars, and workshops, right? So happy to have you all here as part of this workshop as well. So what are we going to cover today? One, we'll start with very basic introduction of FP&A introduction. FP&A, what is FP&A? How is it different from a controllership role? How is it different from a compliance-oriented role? We'll understand a little bit about FP&A. Then we move into understand management reports. Why management reporting is important. What are management reports? What are some of the good qualities? What are some of the essential things that you need to keep in mind while building management reports? That's what we'll cover in this section. And then we'll move to understand a little bit about your audience as well. The way you present management report to senior audience and junior audience is completely different. So we look at a quick guide that will help you understand your audience better and choose your reports accordingly. And then finally, we'll cover different types of management reports. We'll show you various examples and different types of management reports that are commonly used in the FP&A function as well. Okay. All in all, it's going to be a value-packed 60 minutes or so. Get rid of all the distractions, 100% focus on this session. And at the end of this program, at the end of this webinar, we have got some surprises for you as well. Okay. So stay tuned for it. Let's get started with today's session. A quick introduction of what is FP&A and where does it sit into the CFO's office. Okay. To understand a little bit more about FP&A, we have to understand how the CFO's office is structured. A CFO's office has broadly three categories of roles. Okay, one is the controller-oriented roles, and then there is FP&A, and in a large organization, there will be a separate treasury function as well. Okay, the controller role is all about compliance-oriented roles, which is about your AP, AR, GL, tax, statutory audit, internal audit, tax audit, stocks audit, all the regulatory reporting, financial consolidation, publishing annual reports, all of that is taken care of by the controllership roles. Okay, that's more compliance oriented. Then the second bucket is all about performance management. Somebody needs to tell the CFO how the business is performing. Somebody needs to tell the CEO, the business leaders in the company, how the business is performing. So that is where FP&A comes into play. And here we look at activities like budgeting, forecasting, different types of financial analysis, commercial analysis, pricing, recharges and allocations. There are different types of reports that we are looking at. We look at some examples today as well. And then the third function is the treasury function, where especially if you're a large organization, then you're looking at aspects. Then you're looking at aspects like cash management, currency, forex, hedging, investing surplus funds, fundraising. All of that is managed by the treasury function in the company, right? So these are the broad three buckets that you office, right? Now, depending on the kind of company you operate in, if it's a very large company, then these will all be distinct functions. But if it is a small and medium enterprise, right, you would be the one who's handling the AP. You are also the one who's preparing the budget. You are also the one who's handling the treasury function and the banking relationships as well, right? So if you're working with a small and medium enterprise, then your role is likely to be blended. You will do a lot of things in these set of activities. If you're working with a large company, then your role is going to be pretty distinct, and you'll only be working on the specific stuff within these buckets. Yeah, I hope that gives you some understanding about where FP&A sits into the organization. Now, to understand a little more about FP&A, right? There are three main activities that FP&A team operates in, right? So one is budgeting, that is your annual business plan. You're preparing your financial statements for the next upcoming financial year. Then forecasting, that's your monthly forecast or a quarterly forecast. How are the projections looking for the balance period of the financial year? That is a forecasting activity. And then comes your management reporting. In management reporting, you will do a lot of comparisons, actual versus budget, actual versus forecast, current year versus previous year, current quarter versus previous year, current year, year to date versus previous year, year to date, all these different kind of comparisons you will do. Then come up with your variance analysis, come up with your commentaries, and then supply these reports to the management so that they can take informed decisions. So that is where management commentaries come in. Now, there could be dozens of small set of activities around these that FP&A teams might be carrying out. Okay, we'll not touch upon all of them today, but largely, no matter what organization you go into, small, medium, large, you will find some or the other variation of these three activities, right? Budgeting, forecasting, and under management reporting, you will see a lot of variance analysis and different types of profitability analysis that is happening. Okay, so with that in mind, we are now moving towards understanding what is management reporting, what are the different types of management reports, what are the fundamentals of it, right? So we'll deep dive a little bit into understanding the management reports for which we have structured this session, and to give you some more detailed understanding about the different types of management reports. Over to you, Asif.
Thanks, Aval. Let me share my screen. So before getting into different types of management report, which is going to be a big part of today's agenda, we'll quickly cover what are management reports. Some of you may not be aware of what exactly these are, especially if you've never worked in FP&A before. So these are management reports. Basically, these are tools that finance teams use across the organization, right? They use this as tools to present financial and not just financial but operational data. Okay, a lot of people call it MIS. Some people call it departmental income statement. It's also called as a natural P&L. Okay, one common thing or one function, I mean, one good feature of this is that everybody in the organization uses these reports. It's not only the finance team that uses this. Although the finance team or FP&A team might be producing this, or they might be the one who might be responsible for generating these reports, it's used by almost all the business teams in the organization. Okay. It creates, I mean, because it is used by everyone in the organization, this creates a lot of times a common language in which the people inside the organization communicate with each other, right? So sometimes you might feel when you see two people from the same company talking about something, and you may not understand it because they're using a common language which might be a part of their management report. Okay. One difference between a management report and a report like a P&L, balance sheet, cash flow statement, right, which are used for regulatory reporting. Management reports are presented in a logical way versus following any company law or following any accounting standard, right? So there's no need to follow any company law or any accounting standards, unlike reports which are regulatory reports like your P&L, balance sheet, which you need to publish to a regulator or you need to publish to the street if you are a listed company. So it's more presentation by logical and natural categories, and it is used for making decisions. Okay. A lot of people ask me, right, how can I draft good management reports? So these are some qualities which usually, if you make sure that your management report has, it might get further, I mean, it might get better and better in terms of the quality of your reporting. Okay. One of the biggest thing that I've learned, right, in the last 10 years or so, less is more. So shorter your report, better. You don't have to create a report which is 25 slides or I mean 50 different slides. It is better if you are able to convey the same information or convey the key message in 1 or 2 pages. Okay, so shorter is better, and ideally, you would see that these days people are preferring, or most of the managers are preferring a one-page dashboard or a one-page report. They should be decision focused. The information and the insights that are there in the management report should drive decision making rather than just presenting numbers. Okay, so it should not be just numbers, it should be guiding them or helping them to make certain decisions. It should be easy to understand. It should not be complicated or difficult for especially people outside finance to understand. So it should be easy to understand, navigate, and easy to read. And I'm especially talking about from the point of view of non-finance people. A lot of these reports will be consumed or will be used for decision making by people who have not studied accounting and finance. Okay, consistent look and feel. They should add some. I mean, you should usually have a standardized format that helps you to quickly produce them, and it helps in quick reading also. So usually you would see that it is following the same consistent format month on month, and it'll very rarely happen that okay in the first month the month end report looks something, and in the second month you change it, and in the third month you make it something else, right? It'll be very consistent month across month. Only things will change is the numbers and the columns of the month, and in the comparisons, the overall look and feel of the report will be very consistent month on month. Simple language, we already talked about that. Frequency, how often should you send management reports? So it depends. There are some reports that you send on a quarterly basis, some reports which you send on a monthly, prepare on a monthly basis. There are some reports which you will prepare on a weekly or a daily basis. So depending on how frequently that area is, I mean, depending on the criticality of that particular area in which you are reporting, for which you are reporting, the frequency might differ from as as small as like weekly or daily or weekly, and it might be even monthly or quarterly. Okay. A lot of people, right, usually when you're working in your controllership roles or accounting roles, your objective is to be 100% accurate. Okay, that is one of the requirements of that role. However, when you're working in FP&A, it's okay if you're not 100% accurate, right? There will be times where you don't have 100% accurate data, but still you'll have to prepare reports to for making decisions. So 100% accuracy may not be possible always in FP&A. You may have to sometimes work with data which is 95% accurate or 98% accurate, and with a caveat or with the understanding, okay, there is some ambiguity in this data, but this is good enough for the people to look and make a decision. Okay, so maybe sometimes you may not have 100% data, and you may be asked to prepare a report. Okay? So these are some of the what you call qualities of a good management report. And with that, what I'll do is quickly pass it back to Dhaval. Now that we understood what are management reports and what are the good qualities of a good management report, let's also understand why is it important to know your audience and tailor your reports for your specific audience. Okay, back to you, Dhaval.
Fantastic. You can bring the three slides. Cool. So understanding your audience is important because the way senior management looks at reports and mid and junior management looks at reports is very, very different. For senior management, something we look for is a strategic dashboard, very high level, goal focused. They don't have time. So you have to just talk in, let's say, colors, right? So if there is green, then you can ignore it. If there is amber or red, then you need to look at it and then take some action or whatever the decision that is required. Kind of for decision required to be taken, that's what needs to be presented to them. For mid-level managers, they prefer an analytical dashboard. They are more detail oriented. They like rich comparisons. They like complex data. They want to get into it. Preferably a dashboard with an option to drill down, drag and drop. All of that is preferable for mid-level planners because they would like to get into the details of it. And then for operational or tactical stuff, which is typically junior and they are not into much analytical or decision making, you need to give them something which is very tactical and very actionable, saying that, okay, if the temperature exceeds such and such percentage, then you need to take this action, X action or Y action, right? So it needs to be highly tactical, and then give them actions or focus on the outliers or exceptions and give them an action point as to, okay, if you meet this exception or if you meet this exception, then you need to take this action. So that is how this is a quick guide on how you need to kind of tailor your reports towards different levels of audience. Over to you, Asif.
Okay, so now you've understood it. What are management reports? What are some good qualities of reports, and how you can tailor your reports for specific audience from senior management to middle level management to people who are operational or people who are working on the front lines executing the tasks, right? So you understood that. Now what we'll do is we'll quickly learn about some of the most common management reports, and probably what I'll do in this part of the presentation is instead of sharing a lot of slides, I'll share some examples of management report which we usually share in our FP&A masterclass. Okay, so we'll share quickly maybe 5 or 6 examples of different types of management reports that will give you some idea of how they look like. And if you want to, if you're somebody who's looking to work in FP&A, how your day-to-day work could look like, as management reporting is one of the big part of the FP&A role. Okay, so we'll do that. So first of all, quickly, I'll just list down some of the reports, right? So a lot of people do month-end reports, quarter-end reports. Flash report is a common report that FP&A people do. Reporting on risk and opportunities is something that very common. Then there are some certain performance management frameworks that companies follow. Some companies follow balanced scorecards. Some companies follow something called as KPIs. Okay, so they track and they measure their performance based on key drivers, or some people call it key performance indicators. And there's a new framework which was fairly new, right? It's been there for last 10-15 years. So this, which is called the OKR, is the objective and key results. So what we'll do in the next 20 minutes or so is just quickly understand, or maybe just not, maybe what I'll say is I'll quickly show you some samples or some examples of these different types of reports. And that's the way we will make, I mean, the objective is that you get a feeler of how these reports look like. if you want to work in FP&A, or if you want to create these reports, this might also give you some inspiration or some ideas to do that. Okay, so quickly, month-end report. Okay, simple stated, right? What a month-end report does is it gives you the performance commentary for the previous month numbers. Okay, so for example, you are in the month of April and you are preparing a month-end report for the previous month, which is month ending March. It what it does, right? It gives you the actual performance of the previous month, which is the March month in this case, comparing it with the whatever you had in the budget. Okay, you must have prepared this budget maybe 6 months back in the previous year. Okay, so it compares your performance with your budget, and also if your team is 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 doing forecast, or your team is performing another FP&A activity which is called forecasting. If you're doing that, you also compare it against your forecast. So you compare your actuals against the budget and the forecast, and you provide some commentaries for what is happening, actual versus budget, actual versus forecast, and what are the business reasons. Okay, this is the most important thing, not the accounting reasons, but what are the business reasons of your actual numbers being different than your budget, or your actual numbers being different than your forecast. Okay, let me just share one quick example of a report. Okay, so I'll just show you one example, right? What a month-end report could look like in Excel. Okay, so this is an example of a month-end report where you will also see the concept of KPIs and drivers coming in. So pay attention to that as well. Okay, so you typically a month-end report is a report where you have a mini income statement. Okay, mini, why mini is because it is usually not more than 10 lines, 10 to 15 lines. Okay, so the top part is the income.
Asif, if you could increase the size a little bit.
Yeah, let me do that. So idea is not to, so don't worry if you're not able to see the numbers. Even if you're able to read the text, that should be fine. It's okay if you're not able to read the numbers. Those might be slightly minute. Okay, is it better now? Okay,
Yes.
perfect. Okay, perfect. Okay, so usually it's a mini income statement, usually 10 to 15 lines, not more than that. The top portion is a revenue portion. Okay, revenue portion, you typically list down your top 3 to 4 or 3 to 5 revenue streams. Okay, revenue streams is another term. Okay, so for this is a banking company P&L or a month-end report. Okay, so month-end report for a typical bank. Okay, so what are the bank's revenues? In this case, it is earnings or revenues from interest margin. So this is called net interest margin. Also, bank earns from transactions and commissions. Okay, so these are the top three revenue streams for a bank, and you see that listed on the month-end report. Okay, then you also list down the top 5 to 7 expenses. Okay, so for a bank, the top expenses would be your salaries, your NPAs written off, right? So loans going bad and banks need to write off those loans. So that is a big cost for the bank. Technology platform expenses for your mobile banking, internet banking, right? That is another big expense. Banks usually have branches located across the country, and rent and utilities, insurance, etc. Cost of that branch is one other important cost or big cost for the bank. So that's the way you list down the top 5, 6, or 7 expenses. And once you have the top 3 or 4 revenue streams, and once you have the top 5 expenses, you create a mini P&L report on the top. Okay. Now, if you notice at the bottom, right, in the second half of the report, you will see certain KPIs or drivers. Okay, so let me highlight it in a different color and freeze this so that I can scroll down with the headers. Okay, now what this does is that you are identifying certain non-income statement related metrics. Okay, so these are not related to your income statement. These are not your revenues or expenses. You are identifying certain non-income statement related drivers. Okay, a lot of people call it drivers. A lot of people call it KPIs or key performance indicators, which are directly driving your revenues or expenses. Okay, so in this case, your end of period loan balances. And this is a non-income statement driver or a KPI. Okay, usually you see loan balances in the balance sheet. Okay, so you say your net interest margin is driven by your end of period loan balances and your end of period deposit balances and the interest rate. So these are the 3 KPIs that usually drives the net interest margin. Okay, that is one example. Okay, and then you have other examples like transaction fees, commission would be driven by your end of period or your average assets that you manage or average investments that the bank manages. Okay, on that they might be earning certain transaction fees and commissions. Okay. Insurance is typically a third party product. They would have a tie up with an insurance company and they would sell their policies. And on those insurance policies, bank could usually earn some commission. Okay. So if you notice this green in color, they are all related. Your income or your revenues from transaction commissions are directly related to your EOP or average assets under management or your number of insurance policies sold. Okay, so these are typically related. That is the way you can relate other items also. And if you notice, your salary is related to headcount, your branch cost is related to the number of branches. Okay, and this is the way you create a month-end report, and where you have a mini PNL on the top, and then drivers which are directly related to these income statement, revenue, and expense lines. And when you do the commentary, so I'll come back to the PPT. So when you do the commentary here, you can directly correlate your actuals versus the budget. Was okay, this is my net interest margin. It is 2 million behind the budget. And one of the key reasons could be that it is because of the lower end of period loan balance. Okay, that could be one of the commentary, or it could be because of the lower interest rate or different interest rate, right? So this is how you correlate your income statement metrics on the top with your drivers and KPIs at the bottom, and then create a month-end report like this and do commentaries about it, which shows the business reasons for your variances between your actual versus budget. In some cases, you could also do actual versus forecast. Okay, so this is typically how your month-end PNL would look like, or your month-end report would look like. Okay, I'll not go into the quarter-end report. Right, quarter-end report typically is very similar. Only key difference is that it is a period of 3 months versus a period of 1 month. That is the key difference. And in some cases, you might be doing forecast for the next quarter also in a quarter end report. Okay, so you might in a quarter end report you might be showing the forecast for the next upcoming quarter as well. Okay, so typically very similar. Only difference is that the period is a 3 month period, and you might have some additional details, right? You might have risk and opportunities, which we will talk about in some time. Okay, you might have the forecast for the next quarter, as I already mentioned. You might have some highlights, lowlights, key learnings from the previous quarter. Some more additional slide you might have in a quarter end report. Okay, so this is typically how your month end and the quarter end reports look like. Okay, I'll take a pause, see if there are any questions in the chat box on whatever we have covered so far. I don't see any questions as of now. So for people who are DMing me, right, I may not be able to answer you right now for a very specific question which you have for your particular situation. So for those whoever have DM me, we will reach out to you after we complete the presentation. So maybe at the end when we do the Q&A, we'll take your question at that point. Okay, but if there are any questions relating to whatever we have covered so far, you can put that in the chat box. We'll be covering that right now. Okay, so no questions as of now. So what I'll do is I'll keep going. We have covered the month end and the quarter end report. The next report is something called as a flash report. Okay, so what the flash report does is that it bridges your gap between the two month end reports. Usually, you will be sending the month end report in the first week of the month, and then the next report will be shared in the first week of the next month. Okay, so say if your senior or your business teams want to monitor certain numbers, more closely or on a more frequent basis. Say they want to look at something on a weekly basis, right? So they may not want to wait for the month end report, which will come after 1 month. Okay, they may want to know what is happening during the month, and that's where the flash report comes in, where you can provide more granular level information on a weekly basis. Okay, I'll again give you one example of a flash report. I'll open up a file. Okay, this is okay. Again, I'm just repeating this. This is not standard, or right. This is not how every report will look like. Right? This is just one example. It can look different for different companies. It can look different for different industries. Right? It's more or less going to be similar in terms of the concept, but the look and feel and the structure might be different in different companies, different industries. You typically tailor it according to your senior management's preference. Okay, so you sit with the senior management and then you ask them, what do you want to see? They will tell you, okay, I would like to see new registrations, total payers, cash, revenue, month on month retention, right? These are the things I want to see. And I want to see that for global and US and EMEA and all the regions that we have in the company. And I want something which can tell me the last week's number. And I also want to know the month to date number, right? So this is a conversation I must have had with my senior management. And that's the reason I would have come up with this type of a report, right? So the structure of the report will highly dependent on what your management wants to see or what your business teams wants to see. Okay, so I'll tell you what's happening in this report. So the there's a question in the chat box, right? Provide some examples, some more examples of KPI. So these are examples, Vaishali. So new for this particular company, this is an education company, right? That earlier was a banking company. This is an education company. So for your education company, your new registrations on the website is one of the key performance indicator or a KPI. Okay. Total number of payers, meaning total number of people who buy the courses, is another indicator or KPI. Okay, so they have identified these are the top 6 KPIs for the company. Again, this will be different for different companies and even different for different companies in the same industry. Right, one edtech company might have different KPIs, other edtech company might have different KPIs. So this is very specific to the company. Okay, so once you've identified the KPIs and once you have identified the structure, you can then tailor the report according to that. In this report, what is happening? You are giving the last week performance numbers. You are giving the month to date performance numbers. Okay, so for example, today is say 6th of the month. This will give last week's performance and month to date for numbers till 6th of February. If today was say 12th of February, this would give the performance of the last week, which was ending say 8th of February, and this would have given the month to date performance of say if today 14th February, it would have given your month to date numbers till 14th of February. Okay, and also estimate of the full month. Okay, so how will the full month look like? This could be as simple as your month to date numbers, which is this, plus an estimate of the remaining portion of the month, which is going to be and rough estimate. So this is a typical example of a flash report. The main point here is that it is a more frequent report compared to a month-end report, and it bridges your gap between the 2 month-end reports. Okay, so it usually typically sent on a weekly basis. Sometimes you might even see this being sent on a or prepared on a daily basis, especially for a very critical key performance indicator or a very critical area of your reporting. Okay, I'll stop here and see again if there are any questions. In the meanwhile, I'll open up a new report or a new example. Let's see if there are any questions. Okay, so now I'll go back to the PPT for a bit. Okay, so we looked at right month-end reports, quarter-end reports, flash reports. Let me now share an example of a risk and opportunity. Right, how does a risk and opportunity report look like? So let me go back. We covered all of that, which was on the flash reports. Okay, so this is how typically a risk and opportunity reporting or a tracker would look like. Okay, so on the top you see example of a risk. Okay, this is a risk item, meaning this is going to cause some loss to your company or potential loss to your organization. That is what the risk is. Opportunity means that you see a potential opportunity that you could save some money or you could make some more money, right? Right. That is what the opportunity means. Okay. So you are tracking risk and opportunities in Excel tracker like this, okay, with different columns. Okay. We'll give you one example of a risk and one example of an opportunity. Okay. So say, for example, the risk is that you would lose one of your biggest client. Say the client name is X. Okay. So that is the risk that you are seeing based on your conversation with the sales team. You figured out, okay, this client X, which is probably 25% of your entire company's revenue, this client is thinking of taking his or their business to a different company. Okay, so that is the risk that you're talking about. Okay, then you will have category, right, which is the account line this will impact. Okay, which is the area this will impact. Okay, so this description says possible attrition of client X due to delivery or service delivery issues. And what the team is doing, what is the team doing to mitigate this risk or reduce this? They are the sales and the customer success teams are monitoring this closely and they are in conversation with the client. Okay, so this is what the description says. A category, this is a part of the revenues. New or change, meaning is this a new risk or a new first time that you've seen this? Okay, if it was, if this is the first time you're seeing this, you would put new. If this is something that has been known to the management before and something has changed on this, right, you might say change. Okay, probability is the possibility of this client going away, right? So in this case, based on your conversation with your sales team, they say they feel that okay, 70% chances that the client might not continue. Okay. Was this risk included in the previous forecast? If yes, then you will say yes. If no, then no. Included in the previous forecast, meaning you would have adjusted your previous forecast report by that particular impact. Okay. Okay. And what is the impact of that? Or what if the client goes away, what will be the full year loss to the company? In this case, it is 200,000 US dollars. Okay. So this is an example of a risk. At the bottom, you will see an example of an opportunity. So in this case, because of cancellation of conferences, physical conferences due to COVID, you are saving money on the travel and meetings. Okay, so that is why you're calling that as an opportunity. Okay, because of the COVID year, all the physical conferences got cancelled, and because of that, company saved $50,000. Okay, so that is what happened. I mean, that is what you're forcing to happen in the next 3 months. That is why you're calling that as an opportunity. Probability is almost 100% because government has declared right lockdown for 3 months, and no physical conferences could happen for the next 3 months. And you already included that in the previous forecast. Okay, so yeah, this is an example of a tracker which you maintain for risk and opportunities. And we talked about the different items in that tracker, right? Item, cost center, description, category, new, change, probability. What is the current year impact? Have you included or excluded this in your previous forecast that you had shared with the business? Okay, so these are the different parts of the tracker. Okay, once you have this tracker ready, right, it will not be just one item. Might be you might have 10 items on the risk, 8 items on the opportunity. Okay, so you might have a detailed tracker for this. And after you do that, you might want to present it in a slide in the month end or a quarter end report. That's why we saw, when we saw the quarter end report, we saw a slide on risk and opportunities. Okay, so this is how you might present it, right? It's not related, right? These two are not related, but you might highlight the top three risk or top three opportunities in a presentation when you are select or when you're presenting this to the senior management. Okay, this is again another example of how you present risk and opportunities in a presentation. Okay, so we've covered, right? We've covered month end reports, we've covered quarter end reports, we've covered flash reports, we've covered risk and opportunities. Now, what we will do is, let me see what's there in the chat box. Okay, can you provide some more examples of OKR? So let me do that. So what we'll do is we'll come to, so whatever we saw right now, right, that was an example of a KPI or a month-end report, right? It was not a OKR. Okay, so let me share an example of how OKR is different from a month-end report, right? So let me just share that. Okay, again, this is an example of real life company, right? Excluding, we have removed the data, but this is typically how usually companies like Google, right, who use OKRs, they report their, they perform their objective and key results or OKR. Okay, so let me share this OKR example. Okay, so how typically it looks like is that you on the top you will have the mission of the company, right? Whatever the company's mission vision is. Okay? Below that, you typically this is prepared on a quarterly basis. It's not done on a monthly basis. Okay, typically you prepare OKRs on quarterly basis. Okay, so in this case, the quarterly goal for the company. Okay, so right now we are at the end of Q3. Let's assume that. Okay, so the Q4 goal of the company is 100 million revenues, 6,000 new customers, and a retention rate of 50%. Okay, and it's a OKR of the same company for which we saw the flash report. It seems like okay. Okay. Now, what the OKR does is that it divides the company goals in different departments or different teams. Okay, so in this fictional company, let's say there are three different departments. Okay, one is a certificate department, one is a monthly subscription department, and the third one is an annual subscription department. Okay, they are responsible for different products and services. Okay, this OKR, what it'll do is it'll divide the goal of the company across different departments. It will say, okay, the certificate department will bring in 25 million, the monthly subscription department will bring 30 million, and the annual subscription department will bring 45 million. Okay, so this is how we will get to our 100 million revenues. 6,000 new customers, 3,000 will be from certificates, 2,000 from monthly subscription, and 1,000 from annual subscription. Okay, so this is how you divide the goals of the company across different teams, different departments, not just different teams and different departments. If you look at the certificates team, right, inside the certificates team, they will have similar goals like the company had here on the top. Okay, so the certificate team goal is 25 million in revenues, 3,000 new customers, 10 new course launches. Okay, so this was not there in the company goal. Okay, but to achieve this 25 million, they realize that they will have to launch 10 new programs to be able to get there. Okay, now they will put names against, right, who will be responsible for this. Okay, so to get to 25 million revenues, we need 3,000 new customers. That is the driver. Okay, now this department, they figure out, or they decide, okay, 1,000 new customers will be the responsibility of the SEO head. SEO from that particular marketing channel, we will need to get 1,000 customers. Okay, another channel is marketing channel or paid media channel, which is basically running advertisements on social media, right, like Instagram, Facebook, etc., or Google, right? That channel will bring 1,500 or 1,500 new customers. Okay, that's how together we'll add up everything and we'll get to somehow 3,000. And this is not a complete, right? This is just some example. Okay, launching 10 new courses is the responsibility of the content head. So if you notice, the team goals are divided into departments, and the goals are divided further into sub teams and individuals are made responsible for each and every item, and everything rolls up to the company goals. Okay, so this is one example of a objective and key results or a OKR document. Okay, so I hope that answers the question. Can you provide examples of OKR? So this is one example of a OKR. Okay, there's another question. Can we also see few examples of balance scorecards? Okay, definitely we can see that. So let me open that for you. I'm just searching. Okay, so I'm now sharing an example of a balance scorecard. Okay. Okay, what the balance scorecard does is that it measures performance across four different parameters. Okay, so on the left you see four different parameters, and these parameters remain standard whenever you do a balance scorecard for any organization. Okay, so the four parameters are customer focus, internal processes, training, learning and development, or training, learning and knowledge. Okay, and financial side of the scorecard. Okay, so these are the four different parts of a balance scorecard. Typically, traditionally, what used to happen before the balance scorecard, okay, balance scorecard was invented somewhere. I don't remember the exact year, but somewhere in the late right, early 2000s or maybe the late 1990s. Okay, before that, companies were only focusing on the financial metric. They were only focusing on revenue growth, shareholder return, right, revenues, expenses, ROE. Right, that was the only focus of the companies until then. Okay, somewhere in that 1990s or right during that period, maybe 30 years back, companies realize that we cannot just focus on the financial side. We also need to focus on customers. We also need to focus on internal processes. We also need to focus on training and learning and development. Okay, that's how the company will grow in the long term. If you just focus on the financial side, it is possible that the company might do well for maybe next 1 or 2 years, but in the long term, it might suffer if you don't pay attention to all the four aspects of the growth of the company. Okay. So what the customer side does is it focuses on the customer. So for each of the segment or each of the quadrants, you will have one or two objectives. Okay, so this is an example of an objective. And how do you measure that objective? So I'll just give one example so that you understand. For customer focus quadrant of the balance scorecard, on time delivery is one of the important objective. And how they measure this objective is that by tracking the delivery failure rate. Okay. So if your delivery failure rate is more than 2%, meaning that you're not achieving this objective or you're not doing a good job on this particular objective. Okay. If it is less than 1%, right, delivery failure rate less than 1%, meaning you're delivering 99% of the times on time. Okay. That means you are doing well. This might become green. Okay. If it goes more than 3%, your delivery failure rate goes beyond 3%, meaning you're failing 3% out of the 100 cases, right? 3 out of 100 cases, then you might say, okay, we are not achieving our goal. It becomes red. Okay, so you typically have some color coding, which will be red, yellow, green. Some people call it red, amber, green. And green will be right when you achieve your objective. Yellow will be somewhere in between, and red will be when you miss your target or you miss your objectives by a big margin. Okay, typically you do this for all the four quadrants. You do this for internal processes. You do for learning and knowledge. For learning and knowledge, if you notice, staff training, accredited staff training is the objective, and how they measure it is by average number of trainings taken by per employee. Okay, so that is the way they are measuring it. Okay, financial, you already saw that revenue, right? Bookings is a measure, and shareholder return is the ROE they are using as a measure. So this is typically an example of a balanced scorecard. You have this at a company level. You also have this at department levels, and even you have this sometimes at individual levels, especially for senior management, like head of businesses, right? Head of sales, head of marketing. Typically, you will have balanced scorecards for each of the senior management in the company. Okay, so hope that gives you an example of a balanced scorecard. Okay. Another question in the chat box: how do you present EBITDA in a single page report? Is there an example? Do we need to present the whole P&L? Okay, so you don't have to present the whole P&L, right? It depends on what exactly you're looking for, right? If you're looking for analyzing, if you're not looking to analyze at the net margin level, you may not need the entire report on one page, right? You could have till your EBITDA. So I don't have any example right on my shelf here. but typically it would look very similar, right, to one of the examples that we saw for banking. You might stop at the EBITDA level. You might not go to the right interest rates, interest and depreciation, and all of those items you may not want to present. Okay, so all of these examples are example of MIS, right? So Vaishali, all of the examples that we covered, they are typically called your management reports or management information system, right? That's a technical term, but these are all examples of your management report.
So one thing I would like to just add upon here to Vaishali's question, when we talk about MIS, right, we are talking about usually a reporting pack, right? So once the month gets closed, or let's say a quarter gets closed, and when we want to publish our reports, various team members, depending on the size and complexity of the company, various team members will be working on different FP&A reports. And in entirety, it gets compiled as a monthly reporting pack. And this is sent to the senior management or to the business unit lead or to the CFO, whoever is trying to report, look at that particular metrics. Like, for example, a business unit head might be interested in business unit profitability, which are the top 5 products, what is the price variance, what is the volume variance, right? He might be interested in that, as opposed to a CFO who might be interested at the company level, right? Or who might be interested on the overall performance of the business rather than just one business unit's performance. So it's usually not just one report. Okay, send me the MIS report. One MIS report is not common for all the stakeholders in the company, right? It differs from one person to the other, depending on the size and complexity of the business and the way it is structured. Typically, you end up preparing a monthly reporting pack, and this pack could be having 15, 20 different reports used by different stakeholders, right? So that's what you will need to kind of remember. Yeah.
Absolutely. I'll just quickly recap, right, whatever you covered in the last 25 odd minutes. Okay, so we looked at different types. So first we started with what are management reports, right? What do they mean? Okay, then we moved to the some good qualities of a management report. Then we looked at, right, why audience is important while you create management report, right? Your management report will look different if your audience is different. If you are presenting it to senior management, it will look completely different from if you are presenting that same information to somebody who's less senior or junior in the organization. After that, we looked at the examples, right? I showed you like 5 or 6 examples of month-end reports, quarter-end reports, flash reports, risk and opportunities, right? Balance scorecards, key performance, KPIs, OKR, right? We saw examples of all of these, or at least most of these types of reports. Okay, and these are most common reports. There could be more reports, right? We could not cover everything in this one and a half hour, but there could be more reports very specific to different parts of the company, right? There could be a report specifically for sales, right? It could be a sales pipeline report. It could be a report specifically for your HR department, right? It could be a headcount report. It could be a salaries and headcount report, right? So there could be more reports. I have covered the most common ones, but the list could be even bigger, right? If we had more time, we would have covered more reports. Okay. With that, what I'll do is I'll pass it back to Dhaval, and we'll take questions definitely at the end again. Dhaval, you're on mute.
Okay, so we are nearly coming to the end of this training program. So let me just quickly bring up my slides. Cool. So now that you have seen various types of management reports and have understood a little bit about management reports, right? Do you realize how amazing it would be to learn all the high-paying skills related to FP&A? FP&A is in so much demand these days, right? And grabbing a role in FP&A function could be amazing for your career, right? And true story, not kidding. Just today, I got message from 3 CFOs looking for FP&A roles. 2 of them with a large multinational, one of them with a family office holding company, and I'm actually still looking for candidates, right? So it's always in demand. And what we have done is we have spoken to hundreds of CFOs, and we have narrowed down on 5 critical skill sets that CFOs are looking for today. Okay, and these 5 skill sets are core FP&A concepts like your budgeting, forecasting, management reporting. All of those are core FP&A concepts. Understanding of fixed and variable costs, gross margins, all of those things. Then comes financial modeling. Financial modeling, which is specific to FP&A, like scenario planning, sensitivity analysis, seasonality, trend analysis, all of that is. Then comes data storytelling. It is not just important to analyze the data, it is also important to communicate it in the right way to your audience, right? So how do you communicate it? It's not just about dashboards. It's not just about fancy dashboards here and there, right? So how do you effectively communicate that story, understand the why behind the variance, and then communicate it to your audience? That is what is CFOs are looking for. Business partnering, your understanding about the business acumen, right? How well you can partner with the business, how well you can coach the business, right? How well you can build relationships with the business team, right? When I was working as a CFO, probably 2 to 3 hours of my day just went in nurturing the business team relationships, right? So I used to spend a lot of time with the business teams over coffee, over not just in formal meetings, but informally as well, right? Because I wanted to keep a pulse check on the business. I wanted to understand what's happening in the business, right? So that is what is business partnering. So where you're required to coach certain team members as well, because they don't understand finance like you do. Yeah. And then, of course, technological skills, leveraging all the developments in AI, Gen AI that are happening and use them in your FP&A roles, right? That is what is important. And these are the things that CFOs are looking for to help you equip yourself with all these 5 critical skill sets. So what we have done is we come up with live coaching programs every month, right? And this is the Q1 schedule that you can see in front of you. We will be starting with our FP&A masterclass, which is a 4 weeks signature FP&A program, which trains you from beginner to intermediate level. That is starting this coming Saturday from 8 a.m. to 11 a.m. IST. And then there is finance leadership masterclass, which starts on Sunday, which is about leadership and purely on team leading. How do you grow to become a finance leader? AI for finance and FP&A, all the Gen AI developments that I spoke to you about, that is starting in March, on 8th of March. And then financial modeling in FP&A is starting on 9th of March. So we keep conducting these programs on a regular basis so that all the relevant skill sets that CFOs are looking for, you can equip yourself with and then help you upskill and get ready for that next opportunity in the finance function that people are looking for. So what we'll now talk about is FP&A Masterclass. This is a 4 weeks coaching program where you can understand about the FP&A roles better, right? Rewire your minds to get ready for FP&A. Fundamentally, how compliance roles are structured and how FP&A roles are structured are very different and the reports are different. The way we approach is completely different, right? So this course equips you with all the fundamentals of FP&A, and helps you think beyond compliance. And we also share a lot of practical tips for growth, all the essential modules like budgeting and forecasting. We help you practically do certain budgeting and forecasting exercises, revenue, different types of costs of goods sold, marketing budget, headcount budget, all of those things. Management reporting and analysis, different types of management reports, profitability analysis, variance analysis, margin mix, price volume variance analysis. All those examples are shared in module 2, that is management reporting and analysis. Then storytelling and presentations. We share with you the storytelling best practices, presentations, how do you understand your audience, how do you tailor your presentations. We share with you different kind of storytelling frameworks as well. And then comes finance business partnering, right? We share with you examples of how you can partner with a business, how you can truly be adding value to your business as a finance professional. So that is what is the finance masterclass is all about. Batch 18 is now starting on 8th of February. Okay, 8th of February. And the sessions are planned in such a way that you are able to understand,
Sorry,
digest.
batch 18 is March, batch 17 is
Oh,
February.
sorry, batch 17. Yeah, batch 17 starts on 8th of February, that is coming Saturday at 8 a.m. IST. And every Saturday we meet for 3 hours, right? Every Saturday we meet for 3 hours, do those live examples, coaching program. And we also have a little bit of self-paced studies as well. So we give you certain theory and the basics to be prepared by yourself. And then you study those and then come to the classes. And in the classes, we spend as much time as possible on the practical stuff, making you do stuff, group discussions, case studies, that is what we do. And the entire program is scheduled for 4 weeks and it starts on 8th of February, that is coming Saturday, 8 a.m. to 11 a.m. IST. So and this is the lesson structure. You can also find it on the link that will be shared in the chat box. Okay. Apart from this, it doesn't end there. We also keep doing a monthly Q&A session, guest sessions, so that our alumni community remains active and they're aware of what are some of the latest developments that are happening in the FP&A function. Now, a program like this, which CFOs are looking for, and let me tell you a statistic before I talk about the investment. 79% of the CFOs failed to find the right FP&A talent. That's what a survey that we did revealed, right? And more than 100 CFOs voted in that survey. And 79% of them said that it is difficult to find the right FP&A talent, which means there is a lot of demand for FP&A, but there are not enough FP&A professionals out there, right? And we have seen that people who have taken the FP&A masterclass, they are able to transition to FP&A roles. They are able to do better at FP&A roles. They are able to give interviews better and much more confidently. We have seen all of those developments happening in our alumni. And Asif and I have been training this course since 3 years, and you see a lot of this course has evolved to a great extent to include a lot of examples and practical stuff, right? The program like this, which has a high ROI, the investment is typically $347. Okay, but we have an offer going on today. And if you enroll today or within the next 24 hours, you can get this program at $297, or $50 off. Okay, and we will be sharing the details on the WhatsApp group as well. Asif has also shared the enrollment link and the coupon code in the chat box. You can just go and check it out and make sure that you don't miss out on this opportunity. Okay, and for those of you who have been sincere and staying till the end, if you are still unsure, if you are at the very beginning stages of your career and not sure of whether to start a career in FP&A or no, then you can also check out our free resources, which is the FP&A Foundations course, the interview preparation secrets, resume blueprint course, and also Ask's popular book all about FP&A. So all of this will be available for you for free. We will also share that link in the WhatsApp group. You can take benefit of that as well. But my recommendation to you would be to start with FP&A Masterclass. It's a great program, proven program with 400 plus people have taken it. And you can get in touch with any of our alumni. You also see a lot of testimonials on the landing page as well. Go through it, and then hoping to see you guys in one of the programs as well. Great. So now we have almost come to the end of this training program.
Right. So with that, we'll close the session, right? Thank you so much, everybody, for joining. And we'll see you in one of the future webinars, one of the programs, hopefully. And good luck for your careers. Thank you so much.
All the very best, guys. Have a great
Thanks.
weekend. Bye-bye.
Thank you. Thanks, everybody. Bye.